Abhay Soi joins us, Chairman and Managing Director of Max Healthcare. Abhay, good morning. Thank you for joining us. Abhay, share the big picture for us because the healthcare sector is seeing a lot of changes. Unorganized become organized. PE players are now picking up assets. Big players are expanding into new metro cities. Competition is intensifying, but the margins and the bed ratios are also going higher. What is the big picture? If economy is slowing down, is that affecting healthcare segment also?
Well, if India is going to be a $5 trillion economy, you are going to require quality beds. And we can discuss how many years or how many months it's going to take to do that, or how many months and how many years you're going to take to go from 5 to 10 and so on and so forth. But the fact is that you're going to require quality healthcare. The baby boomer population is going to become older. The per capita income is increasing by a little bit every year. Your awareness of diseases is going up. The burden of disease itself is going up. So, I'm afraid that, we're going to be way behind the asset creation curve for decades to come. So I think, all sorts of investments, okay, all with different objectives is required, be it charitable, be it, social cause investments, be it private sector and so on and so forth. And you can even see that in the private sector, right? I think all of those margins, all of those profits which are being generated are being entirely employed to create more assets, are employed to create more healthcare assets, which are so required for the country.
So let's understand a few things about Max. You've been in a capex mode where you've been expanding outside the metros. You've been creating capacity. Could you give us a sense of, in the big picture of 3-year capex, where do you stand right now? How many of your beds are operational, and are you looking at a benefit of operating leverage kicking in as your expansion pick up more steam?
Most certainly. So we are at 5,000 beds at present. Last year, pretty much the same time, we were 3,500 beds. So we've essentially grown by 35% over the last 1 year in capacity alone. In the coming year, we are going to be growing by another close to 1,500 beds, which is equal to another 30% capacity. This is going to be in the forthcoming financial year. And if I look at the collective number of beds, we should have about 3,500 to 4,000 additional beds on top of the 5,000 beds in the space of the next 3 years, that is by FY28. So we should be nearing 9,000 beds by FY28, and about 14 or 1,500 of those should be coming in place in the next 12 months itself.
Okay. The fiduciary need for the healthcare industry is to keep it affordable. The important parameter on which shareholders judge your company is margins. How do you find a balance where you have to charge more, but yes, do a fiduciary duty? It's always this dilemma, right? I mean, television commentators, analysts, we will always say, Abhay, where are the margins? Show us the margin.
I think, it depends how you look at it. None of the hospital chains in India are price makers. We all price takers, essentially. If we were all price makers, then everybody should be operating at close to 100% occupancies. Whilst we have high occupancy rates, all my peers in the entire industry does not operate at high occupancy levels. They essentially operate at close to 55 to 60% occupancy levels. Even in our case, we are dependent on government business for about 25% of our total capacity. So if I take that out, essentially we have 50% occupancy with preferred channels, or with channels such as people who are willing to pay out of pocket and so on and so forth. The government rates are so low that they have not been revised for the last 14 years. So we're all competing for every patient out there. So is every private sector player and every nursing home, every mom and pop shop out there. So that essentially signifies that, look, it's not as if you can charge what you want. Okay, you can only charge what is determined by the market. So that's one set of argument. Another set of argument that I'd like to sort of place in front is, what is happening to all of these margins? What is happening to all of the profit which is being generated? I mean, I'm sure there is no debate on the fact that we require more and more capital assets. We require investment in creating quality healthcare beds. because that is the aspiration of the country going forward as well. So all of these profits which are being generated, and I can tell you in the case of Max, we would have generated thousands of crores of profit over the last few years, but the total dividend has been less than 200 crores for 9.7 crore shareholders. So all of those profits plus the borrowings, that means we are borrowing against our future cash flows, we are re-employing to create capital assets, we are re-employing to create quality healthcare beds. And I can say this for the entire industry for that matter. I think, the total dividend would be less than 500 crores, whereas the total amount of money which has been generated is close to 20,000 crores over the last 5 years, which has gone entirely into capex. And this is the point you were alluding to, in fact, earlier. You said, look, today we are going into tier two cities. The entire private, there is investment cycle which is at its peak in the healthcare sector. Everybody and his neighbor is investing. Where do you think the money is coming from? It's coming from the profit we're able to generate.
Abhay, so in terms of the specific trends for hospitals, what is the specific trend? Will it be centered around expansion? Will it be centered around cost efficiency? Will it be centered around, perhaps more value for money? What is the big trend for the entire sector per se then?
Well, look, value for money has to be intrinsic by the end of it because, like I said, you're in a competitive landscape. The value proposition has to be intrinsic. Be it hospitals, I mean, it's not as if every hospital in every city is full up. And the reason for that is people prefer certain hospitals. It's very similar with restaurants. It's not like every restaurant in every city is full up. People will prefer certain restaurants because they prefer that value proposition. But having said that, the preferred places, there's a shortage of beds over there. And that is what we're trying to, and the entire industry, and particularly in tier two, tier three cities. I think the entire story has moved to tier two, tier three cities. We are seeing very good ROCEs over there. We are seeing huge amount of under penetration, and this demand needs to be met. If you look at, for example, Lucknow, the capital of Uttar Pradesh, you've got a population of 260, 270 million people. And there are literally 3 hospital brands that you will be able to recognize in the entire state. So as the state becomes more aspirational, I'm just giving you one example. As the state becomes more aspirational, they desire better sort of healthcare assets and so on and so forth. Even people, idea of social infrastructure change. Just look at people's idea of airports now. So people are not seeking anything less in hospital and other public spaces as well. So I think quality healthcare beds, quality healthcare assets is going to be the trend going into the future.
All right, Abhay, just in the short term, give us a sense that yes, we do understand the long-term story in terms of the bed addition. You have a very lesser break-even, and that will bode well for the company. But just in the short term, give us a sense that how do you see your occupancy rate increasing, because Q3 did have some seasonal impact, and also what could be the likely impact on your international revenues, because what's been happening in Bangladesh, there has been a bit of a decline in your contribution for your international revenues overall. Do you see that that's still impacting in some of the couple of quarters ahead?
On the contrary, our international business year on year, last quarter grew by 28%. So that's a significant growth in spite of Bangladesh business not being there. So in spite of Bangladesh business not being there, we made inroads in other markets which have yielded great returns for us. And you can see that it's endorsed by the fact that we grew 28% year on year. With respect to occupancy, yes, seasonally you go lower on occupancies. The third quarter, and typically the first quarter are the lower quarters, and we are moving into a stronger, tighter quarter. But do keep in mind that we have more beds, now than we previously had. Like I explained, we had 3,500 beds last year. We have 5,000 beds this year. So when you look at occupancy in terms of percentages, you may feel that it is static or not moving up. But the fact is the denominator has increased. So your occupied bed days have increased significantly, and they continue.
All right, Abhay, really appreciate your time. So glad you could join us, and thank you for this lovely analysis.
Thank you. Appreciate it.